Yo, what's going on? My name is Chase. You're now tuning in to Chase Way YouTube channel, which showcases my life, the things I'm passionate about, and what Arkansas has to offer. If you haven't already, make sure you click that subscribe button so you can be a part of the Driver Squad. Make sure you like this video, because if you didn't know, once you like this video, you let everybody know on YouTube that this channel is valuable. Share this video with your friends and family members and let them know that Chase Way is popping. Let's get into today's video.
Nah, for real. I pull on no star for real. I hop in the whip and take off, you know I'm on my
Driver Squad, what's going on? Chase Way back with another video. In today's video, I wanted to discuss a few things on CNBC, CNBC. Matter of fact, let me just put y'all on the screen. I'm gonna show y'all what I saw in YouTube. 3, 2, 1, let's go. Let's go to YouTube. Let's go to library. Let's go to like videos. CNBC. Okay, so I don't want that.
We stand with you with spider eating.
Oof, turn you down. Okay. Alright, so I was watching this earlier or whatnot, and I'm gonna just read a little bit. Financial analyst Gary Shirley says the stock market could be set for a big pullback similar to the decline in the 1930s during the Great Depression. He explained how the will result in long-term structural change in the economy. Let's just head over to the website so we can get his word from word instead of just the video sake. Let's look up, what was his name again? I don't remember. Gary Shilling. Gary Shilling. Okay. So this is what, oh, they only got the video. Well, I guess we just gotta watch the video then. Okay. I ain't watching that ad twice.
Together some of the brightest minds in finance and economics to answer questions about the state of the economy and the path forward. Everything from unemployment to the stock market to debt to longer-term economic inequality. In this episode, we're speaking with Gary Shilling. He's a financial and economic advisor who has a track record predicting recessions. What do you see as the path forward for the economy right now?
I think what we're looking at here is really an L. It's declining. It's not the V. It's not a recovery in the second half. It's a continuing on down into 2021, and thereafter probably a relatively slow recovery.
What are some of the factors that will affect that shape of the recovery, so the L shape that you're referring to?
I've got a list of about 10 of them, but I think we're going to see a lot more people doing what we're doing, working from home. You know, they're getting used to it. Commuting is not that much fun. I think we're going to see a change in consumer spending habits. People are going to be a lot more cautious in terms of their spending as they go ahead. I think we're going to see downward pressure on prices. And that works the advances of Treasury bonds, which have been my favorite since 1981 when I said we're entering a bond run at lifetime.
So let that be known, that means he been making money in the bonds markets for a long time.
By the way, since then, long-term Treasury bonds have outperformed the S&P by 6 times. And I think
you heard that right.
We have even lower rates because of the safe haven effect and possible deflation.
So it sounds like you see a lot of real structural changes resulting from this pandemic, not just short.
She didn't say the word. Alright, we're gonna move on. So let's check Google Worksheets. So I didn't finish because I've been driving all day. and I'm glad I'm done. So what did I make it to? I made it all the way down to number 59, which only had 20 more to go. But so far, I was able to update everything, and the best stock for the shopping category I ended up finding was Macy's. Still, Macy's pays a dividend. The dividend yield is 20.50%, and I learned this is what this means. So the payout is 0.37 cent, but if you do 0.3775 times 4, and this is how I learned by, I guess the more I kept looking at dividends, I'm slowly learning. 0.3775, once you times it by 4, that's how much money it would be annually. You'll be getting, it would be $1.51 annually, but that's just the payout quarterly. But if you invest in Macy's at $6.08, the 200 moving day average is $11.43. But if you don't expect it to rise until 100% and you multiply by 8, like expecting Macy's to reach 80% of $11.43, it would be somewhere around $9.14. You will be okay with getting your profits with $34.47 off of each share. And I'm gonna pull it up so y'all can see, because I know I have a lot of new watchers and they keep asking me why 80%, and this is why. Okay, so Macy's right now, before the market opens, well, by the time this video goes out, it's gonna be open, but according to 7 a.m. July 7th, it closed July 6th at $6.56. The moving day average is $6.43 in the next 50 days. So that's a good indicator to let you know that it's going to decline a little bit within the next 50 days. Of course, it's going to be high volatility. It might go up and it might go down, it might go up. But if you have the time to day trade it and get your percentage throughout the day, go for it. But I'm not good at that. I focus on what the 50 day and the 200 moving day is telling me, and I go like that, and I look at the RSI. So it's gonna go down a little bit, and then in the next 200 days, it's approximately gonna get up to $11.35 a share. But if you multiply by 0.8, it's gonna be $9 and something. So even if you get it to $9 and something, you don't even have to worry about staying on it, because you just invested on. Or you can continue to invest in Macy's and accumulate dividends, accumulate shares, so your dividend payouts can be higher quarterly and annually. So think about that. I'm starting to think about dividends now. So instead of just thinking about the trades, I'm thinking more so about how many shares can I obtain to get more payout on my dividend. Shout out to Ryan. He got about 23 payments of June, which is dope. So I'm trying to get to that level with Ryan. That was just the highest one. The second highest, which was under $25, was KSS. What's KSS? KSS is Kohl's. So you can get Kohl's for $20.30. In the next 50 days, it's gonna slowly go up to $20.38. And you might be asking, why don't I do this on a 0.8? Because 50 days is a good indicator of just gauging it, what direction the stock is moving. And then the 200 moving day is the long term, which you really should focus on the long term. But yeah, it's gonna continue to rise. I didn't even get to talk about one more thing, Macy's. So the RSI, you see it say 47.30, right? And the brown up here, it shows when you should buy and when you should sell, if you are swing trading. And the brown, you should buy. And then once you see it touch green, you should sell. Because if you don't sell it, now you're losing money. But as you see, it's just teetering between the 50 and it's like above 30, but it's below 50. That's still a good indicator that you still can buy in and just buy into the dip until it reaches bottom line. So what I mean by that is, even though it may be valued at, even though it may be valued at $6.56, approximately the bottom line would be $6.43. So you continue to invest how much money you would like to invest in a company. So say somebody got $350. If you put $50 into Macy's each week instead of the whole $350, you will be entering that new point. So that's called buying into the dip until it reach the bottom line. Yeah, so those two, well, I ain't even finished KSS. But that's a good gauge to judge off those 4 metrics. The daily, what is the stock right now? What did it close at? The 50-day moving average is giving you a good gauge, or is it moving up or down? And the 200 moving day, you multiply by 0.8 to see should you invest in this company. Because if it's greater than your daily, then yes, you should invest. And if you want to find out what would be your return rate, you just subtract the 200 moving day times 0.8. So you would do $11.35 times 0.8, and whatever that answer is, you subtract it from the daily $6.56, and once you get that answer, you divide it by $6.56. Then of course you're gonna times it by 100 to get your percentage. And then the RSI, the brown means buy and the green means sell. And if it get closer to 30, buy and buy into the dip. And then you just be patient and let that money, let everything go up. Okay, let's go to KSS. You can buy Kohl's less than $25, $20.30. Like I said, the 50-day is a good indicator to let you know which direction the company is going. It's going up. The 200 moving day average is $34.88. But if you do it by 0.8, it would be $28.01. I gotta update it because it changed. Okay, 34.88. Let me change that. 34.88. I wonder did. I don't think so. But we're gonna double check though. 34.88. Is okay. Okay. What is it? 37.46. Oh, it's higher than Macy's. Did Macy's change on me? Did Macy's? 656. Yeah, Macy's changed on me. I'm sorry. Okay, so let's update this. $11.35. No, okay, it's still first. Okay. And when this come up on stockcharts.com, you just click no thanks. You just click no thanks. Okay, so Kohl's, the 200 moving day average is $34.88. Multiplied by 0.8 will be $27.90 a share in the next 200 days, which would give you a 37.46% off for each share. They do have dividends. They pay right now 55 cents a share, and a dividend yield is 5.60% or 5.6%, which is very good. 55 cents a share that you're giving each quarter. Dang, that's a lot. That's real good. Now let's look into Cash App to see how my stocks are performing. As y'all know, I sold Momo, and this is where the daily percent has changed. So what is at the bottom? Hertz took a drop Gap took a drop. Under Armour took a drop. General Electric took a drop. Viaset took a drop. Tilray took a drop. US Foods took a drop. Visa took a drop. Iron Mountain took a drop. Macy's took a drop. Disney took a drop. iShares Outbox High Yield Corporate Bond ETF took a drop. Oil Fund took a drop. Bloomberg High Yield ETF took a drop. Short-term corporate bond took a drop. Coca-Cola took a drop. Vanguard Intermediate Term Corporate Bond took a drop. And we had some gains. Investment grade corporate bonds went up. Whiting Petroleum went up. And Chesapeake Energy went up. So those was my gains. I'm still at a loss of $73.84. I'm just being patient. I'm not going to invest $100 in this Friday. Got some bills to pay, so probably the next Friday I will be investing. But for right now, I'm being patient and I'm just letting everything go up. But I got some special news. Y'all might not see me here anymore, or I'm still gonna be consistent. That's something I'm still gonna do. I'm still gonna be consistent. I'm just gonna have to tough it out. But even if I'm a little bit late, I'm just gonna have to still upload. But yeah, I got some things that I'm working on, and I'll give y'all an update. I'll probably be making a YouTube video about my experience here, and y'all will know more about the trucking world pretty soon, so stay tuned. This was stocks. This was day 73 into the stock market. To cash out, I believe. Nope. Dang, is this really 72? Nope, this is day 73. This is day 73. I'm going to leave that video down below so y'all can watch the full thing, so y'all can get an insight. That's something that we've been prepping for 50 days ago. The stock market gonna drop, and that's gonna be the best time to buy in. Trust me, look into all the transportation and things like that. It's gonna be the best time to buy in pretty soon at the end of this month. Y'all remember, I've been putting in my notes of when it's gonna be the best time to buy into the stock market, so let things trickle down. This is great. When people say the stock market is going down, that's just to run people that don't know how the stock market away. When things go down, that's when you buy. That is when you buy. So I'll see y'all in another video. Chase Way out. It's time for me to go to bed. I'm gonna make sure I get this video uploaded for y'all so I can go to bed. Alright, peace out. And yeah, this is where I'm at right now. Alright, it's time to go to bed. Peace.